Let me welcome in Avinash Gorakshakar. He's the founder and head of research at Avinash Mentor on the fundamental side to solve all your stock related queries. First, go across and take the first caller for today itself from Vijayawada. This is Bindu dialing in for a stock query. Bindu, very good morning. Welcome to Ask Profit. What's your query?
Very good morning. So I hold 1,000 shares of Vishal Megamart at 121. Hello.
Yeah, Bindu, I can hear you. Go ahead.
Yeah. I want to know about the medium-term outlook of the stock.
Medium-term
outlook.
outlook.
Should I
Okay.
hold or should I keep a stop loss and exit?
Got it, Bindu. But let me actually go across to Avinash now very quickly. Avinash, Bindu's holding Vishal Megamart at at 120 odd levels. What would you recommend her to do? Because seen some correction this particular stock, but any view of what she should do?
Yeah, good morning, Puneet. I think as far as the investor is concerned, I think she can continue to hold. See, I think Vishal Megamart had come at a price around, I think, if I'm not wrong, around 83, 85 rupees, and has been delivering very strong numbers quarter on quarter. In fact, in the retail segment, it is one of those players which operates largely in the tier 3, tier 4 markets, and where basically pricing is very, competitive. They have managed to hold on to a very strong customer base, show strong volume growth, and decent kind of margins kind of in this business. So I would say that the fourth quarter typically is supposed to be a very large quarter for Vishal Megamart. So you should expect a decent performance. Even in the third quarter, numbers have been decent. So my sense is, the investor has purchased at around 121. Now the price is around 116 odd. There's nothing to worry, but I think in this kind of market, it may take a little bit time before the market sees the potential of this company. So keep a time frame of at least 6 to 12 months. I think a decent risk reward can be expected. The company is doing well. The management bandwidth is also good. So I would say that within the retail space, I think the investor here should hold on and keep a time frame of 6 to 12 months.
The next question that's coming in from Satish Jain from Bengaluru. Now, he is unfortunately holding shares of IDFC First and definitely one which is under pressure today. He's asking firstly why it has opened 15% down. Now, we've been discussing on the show, Satish, that there was a fraud reported of almost 590 crores in Haryana, and hence the stock's down and out today. There was a con call as well in the morning. And, Mahima, you listened to the con call, but a couple of key takeaways before we take the question.
I think the key takeaways were that, they have taken the ownership of this first thing, and they've said that they'll figure out as to how the forensic report comes out, and they will then accordingly decide as to how the treatment of that 590 crore, which has been identified as the financial impact right now, will be treated going forward. But it'll take 4 to 5 weeks as to, for the forensic report to come out to exactly determine as to what is the financial dent for the company. So that's, the overall summary and key takeaways from the con call. But yes, I'll take this up with Avinash quickly. I think it's important for him to kind of address this. Avinash, how should investors who have, patiently been invested in something like an IDFC First Bank read into this?
No, I think, Mahima, the management has clarified that this is a kind of a fraud which happened at the Chandigarh branch. And I think, whatever it may be, the bank is taken responsibility for this. And I think you could possibly see that dent being provisioned in quarter 4 numbers. It's definitely a sizable number, and that's the reason the stock is down by almost 15-16%. But I think, once this event has happened, I think the markets would now look at what kind of growth prospects the bank is likely to do over the next, say, 2 to 3 quarters. In the short term, the stock has corrected now quite significantly. I think a 15% or 16% drop is now already factoring in that kind of damage. So I don't think, you're going to see a further damage. My suggestion is, rather than selling in panic, probably wait for some more time here. I think the fourth quarter numbers would be out. You would get to know the management commentary. And I think in the longer term, yes, this would be neutralized. But in the short term, some pain will continue.
In fact, the management did indicate at the end of the call saying that they're expecting a strong Q4 coming in as well. So that's the view with regards to where IDFC First Bank stands. We've got our next caller. Shridhi is calling us from Hyderabad. Shridhi, hi, a very good morning to you. How can we help you today?
Yeah, hi Mahima. Firstly, kudos to the team. I love both of you, Mahima and Puneet.
Thank you so much.
Yeah, and so I have firstly, so my query is specific to INOX, but I have a broader query where, there are managements who are mentioning that they are going for capex and client acquisitions. Their YOY numbers are also looking good, but the stocks are continuously falling. I have like 3 to 4 in my portfolio. For example, there was Sky Gold, there is Zaggle Prepaid, and now Inox Wind. My question. So my whole point is this. I mean, I'm constantly averaging out just because I can see that they are client acquisitions or capex, but the stock price is actually going at 180. So I just want to understand why does that happen in general, and if Inox win in this particular case.
Got it. Got your question, Sridhi, and thank you so much for those compliments. It really made our day. I'll take this up with Avinash then. Avinash, what's the view like on Inox Wind? As he mentioned, he's been averaging out. The company has been doing capex. The stock price is not picking up. What is your view here?
No, I think my guess is that, I think capex is being done by the company. I think markets are expecting a decent kind of revenue kind of, generation, from the capex. And I think, the fact of the matter remains that wind power, long term is definitely a very good structural story. But somehow the numbers have not been coming, and that's the reason the markets are disappointed. So I think, we'll probably like to wait for the Q4 numbers. The company is backed by a very solid business group. They understand this business very well, and the order book is also quite good. So once the execution gets reflected in numbers, possibly in Q4, I think you could see a good bounce back. So I think, rather than selling in panic, I would suggest continue to hold. But yes, I think longer term, yes, the business continues to be promising because wind energy is one source of energy which the government is also promoting. So I would say continue to hold, but I think Q4 will be very critical to know whether the bounce back comes or not.
Got that view, Avinash. Angel One. Now, this particular space has also seen a lot of pressure. The STT raise was definitely a big kicker for all the capital market players. And, our viewer G. Srikanth from Tamil Nadu is actually holding shares at 1,200 rupees. So, he still bought it at a relatively earlier price, holding 77 shares. And, Mr. Srikanth, if you can call us, let us know what you saw in Angel One at 1,200, because it's definitely been, a doubler, at least for you in that sense. He's asking what he should do with this particular stock now that, there's also a stock split that is on the anvil, is what he's suggesting. Asking his view, Avinash, just based on the price that he's bought at, would you recommend him to book some gains, given that the government seems to be very serious on reducing the volumes in the F&O space? What would you recommend?
No, Puneet, I think he's purchased the stock at a very good level. So I think he should definitely book out some profits and encash his capital. But I think you should understand one thing, that despite the restrictions on the F&O trade, I would not be surprised that volumes are not going to be impacted significantly. Maybe in the short term, there could be a little knee-jerk reaction. But I think, all of us know that the F&O market is something which is growing, and where, traders definitely finally look at the risk reward. So the cost of transactions has definitely gone up post the STT increase. But I would say that, if the investor has a long-term trajectory of next 12 to 15 months, I think the capital markets are one area where a lot of interest is coming in, both on the investment and the trading side. So longer term, the runway is very large. So I don't think it's going to be a very big negative for the, broking business as a whole. So I think he should continue to hold, part book profits, and, try to encash the profits which he has made.
Question that's coming in, it's a stock that's been a pain to investors in that sense, and that's Tata Tech. Now, our viewer, is holding this particular counter, Mahesh, and he's asking, he's bought it at 726, bought 67 shares. And Avinash, his question is if he should continue holding for the long term, and largely if there is any upside potential, and should he average. So he's clubbed all these questions together. What would you recommend him to do on Tata Tech?
No, I think if he's looking at the next 12 to 18 months, Puneet, he should definitely add on declines. I think, this business is something which is very unique, and where the tailwinds are extremely strong. My sense is that, clearly with the AI opportunity, I think there are a lot of initiatives which the company is also trying out. I think maybe in the Q4, you could get a little more clarity. But I think from a longer term perspective, it operates in a very niche space where the business is growing very rapidly. So I think, if the investor has a long term runway of at least 12 to 18 months, then only he should average. But I think, yes, Q4 should hopefully be better than the Q3.
Okay, all right. So that's the view coming on Tata Tech. Avinash as well as Gaurav, it's time for our rapid fire round. Try to keep your answers as short as possible. The first question is from Ramya, who's writing us from Chennai, asking about Apollo Tyres. She's bought at the price of 513, 150 shares is what she has. Wants to know if she can continue to hold or average. Avinash, your view?
Yeah, she can continue to hold.
The next question coming in is on KPR Mill, bought at 1117, Avinash. 41 is the shares that she holds. What she should do?
Here also, I think keep a time frame of 12 to 15 months and continue to hold.
TCS bought at 3,100 odd levels. Avinash, should Mohit continue to hold for the next 3 years?
Yeah, I think he should continue and he can even average.
PSU banks, a larger query. Avinash, is it a good time to invest right now? Is the query from Murthy? Which banks would you recommend?
I think today I think he should look at buying into Bank of Baroda, Canara Bank, Bank of Maharashtra. These could be good bets, in the current scenario.
Okay.
Avinash, you mentioned on Angel One, but a view on Grow as well for the next 3 years is what Nagaraj is asking.
Yeah, I think Grow also should definitely be a good compounder, over the next 2 to 3 years. If he already has it, he should continue to hold.
Okay, the next one is on DEE development, and Bhaskaran is asking this question. He wants to know if this is the right time to make an entry into this counter. Avinash, your view?
I think he should continue to hold. Fresh buying is not advisable.
That's the end of the first round of the rapid fire.
Avinash, your view with regards to Borana Weaves?
No, I think Borana Views he can continue to hold. See, Mahima, this is a company which has gone public about a year back, but numbers have been very strong. In fact, last year they made a profit of 42 crores. This year, I think they should end with 55 to 60 crores of PAT. And I think the management call, after the Q3 numbers has also been quite encouraging. Their expansion has also started. So the real benefit of the expanded capacity will be felt in FY27. So I think, the investor has purchased a good stock. I think if he can hold on for the next 6 to 12 months, a further better risk reward is possible. So continue to hold.
Got that view, Avinash. But another caller coming in from Bengaluru, and Venkat has a stock query for us. Venkat, very good morning. Welcome to the show. What's your query?
Yeah, very good morning to you, Puneet and Mahima. In fact, I have got a query regarding Infosys. Okay, I'm holding Infosys and Tech. But the query for Infosys is I'm holding 75 number of stocks at the rate of 1,700.
Okay.
Okay. And I've been holding for about a year plus. And I have been keeping on listening to your channel, wherein both, the gentlemen like, Parag Thakkar and Kush Bora, they were telling it's a knee-jerk, thing is happening over there in the IT industry.
Right.
I need not bother, so I didn't sell it.
Right.
And will it still fall, or no, I can hold it for about maybe 5 to 8 years' time?
Got it. Venkat, you
What is
bought
the
it
outlook it looks like?
Got it. Venkat, you bought it at 1,700, right? Is that correct?
Yeah, that's right.
That's right. Okay.
1,700.
Got it. Avinash, let me come to you because, IT has been a very disputed space. A lot of queries on that. Should Venkat average right now, continue to hold? What would you recommend?
No, I think even if he has to average, I would say that it's better to do in a piecemeal method. There's no need to hurry. I think, the stock is weak in the near term, but longer term, I think the AI kind of scenario is not going to impact it significantly. In fact, my sense is if the investor can hold for next 12 to 18 months, he could definitely expect a decent risk reward. Typically, they've already signed a JV with Anthropic. So, basically the company is making efforts to now look at the AI challenge in a more rational way. Numbers for fourth quarter, I think, are going to be critical. But I think most importantly, the investor should realize that it's already got a decent order book, a lot of cash on the book. So it's not a business which is going to disappear. So I think if you got the conviction for the next 12 to 18 months, average at the current level and stay invested. Volatility will continue in the short term, but longer term, I think once this AI scenario scare goes away, business will be back to usual.
Okay, all right. So that's the view coming on Infosys. We've got our next question, and this is coming in from Bhavani, who's writing us from Chennai, asking about Jyoti Labs. She's got 50 odd shares at an average price of 251. Wants to know if she can hold, sell, or maybe buy more from a long-term perspective. Avinash, I'll stick with you for this one. What's the view like?
From a longer term perspective, this company operates as a very large dominant player in the FMCG pack. I think FMCG businesses are growing slowly and steadily, backed by good rural demand, typically, low GST rates, low interest rates. So I think, the investor needs to stay invested here for at least the next 12 to 15 months. A good business, but I think the stock will move slowly. I mean, it's not one of those stocks which is a very high alpha stock, but yes, you can definitely expect a decent risk reward over the next 12 to 15 months.
Another caller now dialing in from Chennai, and Meenakshi has a stock query for us. Meenakshi, very good morning. Welcome to the show. What's your question?
Yeah. Good morning, sir. Actually, I'm holding Ola Electric shares, 200 shares at the rate of 102.8. I just wanted to know whether I can hold it or book the loss, sir. Thank you.
Got it, Meenakshi.
So, Puneet, this is really a very difficult question because the investor has lost a significant amount of capital. But my sense is that I think at 25 rupees, maybe the downside is at least capped for the time being. But definitely, if you ask me honestly, how the investor will make money here, it all depends on the performance of the company. I think performance in the Q3 number has been extremely bad. The losses have increased, the volumes have come down. And I think the most significant negative part about this company is the narrative has always been strong, but the numbers have never been delivered. So my sense is maybe another quarter she can wait, but I think otherwise, hopefully, if she gets an upside, it's better to exit because in these companies it's very difficult to quantify what kind of risk reward may happen after the stock is corrected by almost 75-80 odd percent.
That's definitely bold of you to say that it could be something to look at after whatever has happened.
Calling us from Bengaluru. Sujal, hi, a very good morning to you. What's your query about?
Yeah, very good morning to you. Thanks for taking the call. I have an investment of 5 lakhs. So I just wanted to know, is it the right time to enter? And then if it is right time, and then what could be my best strategy to investment?
And what is the time period that you're looking at?
A long time, please.
Okay, all right. Avinash, she's got 5 lakhs to invest in right now. What are the counters that you would suggest?
No, I think better to put your money in large caps, stocks like Mahindra and Mahindra, or for that reason, something like an Ashok Leyland. Auto is definitely a space which we like, and we feel that next 6 to 12 months could be quite promising, considering that GST cuts have come in, interest rates have gone down, rural demand is increasing. So I think in both these spaces, commercial vehicles as well as tractors and UVs, I think these are very large companies where the capital also will be relatively safe and the risk reward will be quite decent.
Okay, all right. So that's the view coming in with regards to where you can park your money right now. Large caps is the preference that Avinash has.
The next question that's coming in is actually on UPL. It's actually another stock with IDFC that's down and out in trade today. We saw on Friday, post the market session ended, the restructuring announced and stocks down almost 13%. Avinash, firstly, how do you view this counter? And actually, our viewer is holding shares at 480. Should he book out, continue to hold? What would you recommend?
No, I think currently, the market is little confused and little upset on the valuation norm, and basically valuation details have not been disclosed. So, that is the reason the market is little uncertain. My guess is that some more clarity needs to come out for this demerger. I think the seed business is going to be demerged into a separate company. And obviously, the existing shareholders of UPL would benefit. But I think because the valuation and the clarity has not come in, the market is giving it a thumbs down. My sense is at these levels, it's not advisable to sell in panic. I think wait for the markets to settle down. I think you would definitely get some management clarification on this aspect. And I think over the next 6 to 12 months, hopefully this demerger move will be beneficial. So I think, if the investor wants to exit out of his existing position, he can get out. But if he wants to have a slightly longer term call over the next 12-15 months, he should hold on.
Okay, all right. So that's the view coming on UPL. Probably the stock is down because of the reason that despite of the restructuring, there is no clear picture right now with regards to the debt position of the company. But moving on, the next question is from Ekambar. I was asking about Godrej Properties. He's got 50 odd shares at the levels of 1786. He wants to know if he can hold or exit and understand as to what should be the next course of action for him. Avinash, I'll stick with you for this one. He's also asking that if he exits this counter, should he invest into Maruti? Is that the right thing to do?
No, I think my guess is, he could exit, but typically, I think, my sense is that we would still be more positive on companies like Ashok Leyland, Mahindra and Mahindra, and maybe in the data center theme, something like Anant Raj, where possibly the traction is going to be quite significant over the next 12 to 18 months. So I think, these could be choices where he could take a call.
Got that view. Avinash?
Question is from Raghu. He is currently holding a long position in BEL with an average price of 263. He says that given the current market valuation, the stock's recent performance, he is evaluating his exit strategy. Should I consider booking partial profits at this stage? What is the fundamental justification for this particular counter? Okay, so Avinash, I'll take this up with you. Would you recommend him to book his partial profits, or would you recommend him to continue to hold the counter?
No, I think he can book out part profits here because he's made a decent upside. But I think the rest of the quantity he should hold on, because see, this is one company where our sense is that Safran, who's one of the French companies, has done a JV with the company. So the benefit of this deal plus the existing order book is going to give a lot of traction for the company over the next 2 years. So I think defense business is growing very rapidly. They have a very healthy balance sheet. So 50% one could book out, and the rest one could take a time frame of 12-18 months. Obviously, the risk reward going forward will be much better.
Got your view, Avinash. But the next question that's coming in from Pune, and Dhyanesh is having a stock query for us. Avinash, is it a good time to continue holding Bharat Dynamics? Is it also a good time to average down? What would you recommend?
Well, I think if the investor has a 2-year kind of time frame, the runway definitely looks good. They have a healthy order book, and in case of surface to air missiles, BDL is a very prominent supplier. In fact, they have been exporting their products to quite a few countries. And typically, Q3 was a soft quarter, but Q4 is expected to be a strong quarter with better execution. So I think, he can even average, but keep a time frame of at least 18 to 24 months, because at these levels, the stock appears to be fair to expensive. So the market should obviously reward the company with a better earnings multiple, on FY27 numbers.
Okay, then.
The question is on SKF India. Srikanth from Bengaluru is asking if it's a good time to enter this counter. Avinash, I think he's not mentioned which one, because I think there are 2 entities now, but what would you recommend?
I think the auto bearing player, I think should benefit, because clearly with the commercial vehicle, with the two-wheeler and the passenger car segment doing well, SKF is a very large vendor in the ball bearing space. And typically, I think after the demerger, the return on capital employed, the earnings growth is expected to do well. So I think, if the investor can wait for the next 12 to 15 months, he could definitely start buying slowly. I mean, maybe he might deploy 25% now and wait for the next quarter results. But typically, it's a calendar year company. So obviously, the January to March numbers should be reasonably good, coinciding with the kind of growth auto sector normally shows in the Jan to March quarter.
Okay, all right. So that's the view coming on SKF India. The next question is from K. Parthasarthi, who's writing us from Chennai, asking about Lemon Tree. He's got 100 odd shares at the levels of 148. He wants to know if he can continue to hold, add, sell from a long-term perspective. Avinash, your view, because considering that they've continuously added rooms in the last couple of quarters, that's now started to play out in terms of where the operational metrics also stand. So what's the view like?
So longer term, I think Lemon Tree will do well, because they have targeted the middle and the affordable segment, and that's the largest part of the hospitality market. But I think they have also announced some restructuring, Mahima. I think that also will get reflected in FY27. So I think the balance sheet will also get a lot leaner. The ROC will improve. The earnings will also improve. So I think to that extent, the investor should wait for the fourth quarter numbers. And I think here you need to invest for a slightly longer period, 12 to 18 months. Only then I think you could get a decent risk reward, from the investors who have purchased it at around 130, 140 levels.
Got that view, Avinash. Just Wopac, Avinash, bought by Harjit at 228. Stocks up 9% today. What would you recommend?
Yeah, I think continue to hold.
The next question is coming from Mohan. He's holding Jubilant Foodworks at 555. Avinash, what would you recommend?
Yeah, continue to hold.
Okay, Tech is the next one. Kajal from Maharashtra is holding 6 shares at the levels of 18,290. She's sitting on a loss of 45,000 rupees. Can she continue to hold from a long-term perspective, Avinash?
Yeah, continue to hold.
Is it a good time to enter Hindalco, Avinash?
Yeah, I think from a longer-term perspective, yes.
Vitas India, V. Nagaraja is actually bought at 635, Avinash. He's asking if he should continue to hold or book some profits now that post the announcement of the stake sale.
No, I think he should hold on. I think probably he could get a better price to exit.
Bank of Maharashtra at 56, held by Tejas. Avinash, what should he do?
I think he should continue to hold.
Then has actually bought Union Bank shares at 165, but Avinash, he's holding 46,000 shares. Should he continue to do so, book some profits now?
Yeah, I think some profit booking advisable. Rest he can hold on.
Well, got that view, Avinash, as well as Ajit. Thanks so much for joining in and helping us solve all those stock-related queries. That's the end of the Rapid Fire as well as this edition of Fast Profit. And we've been able to solve 55 queries. So thanks so much to both of you.